Hi and welcome to the Trading Bells show right here at the NSE, and we are speaking to the NSE CEO Geoffrey Odundo, who is on set. Just look through how 2023 was and crossing over to 2024. What do we expect, especially in the markets? But first, let's take a look at his profile.
Geoffrey Odundo is the Chief Executive of the Nairobi Securities Exchange PLC. Mr. Odundo, an accomplished investment banker, has been in the financial services sector for the last 26 years, 20 of which have been in the capital markets in various senior roles in asset management, corporate finance and securities trading. He is currently a director of the Central Depository and Settlement Corporation Limited, director of the NSE Clear Limited and a trustee of the NSE Fidelity Funds. He is a member of the Central Bank and Consolidative Forum for Domestic Debt Market and a council member of the Institute of Certified Investment Financial Analysts. Mr. Odundo is also a director of the Association of the Stock Exchanges of Africa and is a member of the Thomson Reuters Africa Customer Advisory Network. He holds a master's degree in strategic management and an undergraduate degree in mathematics and economics. He is also an advanced management program graduate from Strathmore Business School.
Jeff, welcome to the show.
Thank you, Maina.
It's always a pleasure.
Nice.
So let's start by just painting a picture from your end on the global operating environment. We have had quite sentiments out there, and looking at how the markets have been, paint to us a picture of how the macroeconomic development has been and has defined 2023.
Okay.
Yeah.
So 2023 has been a very interesting year. A year of mixed bag of things where there've been a number of global macro issues that have had an impact on our Kenyan market. We started the year off with a war in Europe. And that caused a serious disruption of supply chains, especially raw materials coming off the Ukraine. We're a bigger agro-based country. That persisted. It had a knock-on effect on the availability of goods and services and production, and hence we started seeing inflation creeping in. And as a result of inflation, for the first time we're seeing inflation in the high single digits of 8 and 9% in Europe and the US. And to tame that, then these countries had to increase the level of interest rates. And so for the first time, the Fed rates have gone to a high of 5.25%. And followed by what's happening in the UK and Europe as well. And what that has done, it has then seen the global allocation of capital to global markets like ourselves. We've seen those allocations reduce quite drastically as people now go and put money in the more developed economies, because as interest rates rise in the US and the UK, all dollar investments then become attractive for the global investors because of the risk profile of those countries. So that reallocation of capital away from emerging and frontier markets affected our markets. We saw capital flight leave the market. And as a result of that, then the valuation of stocks have been declining over time because of lack of a strong buy side. And then also for us as a country, we've seen interest rates rising as government tries to grapple with how to manage the economy. And of course, as a result of that, the domestic interest rates are rising. And so also domestic investors prefer then to go to fixed income assets as opposed to equity markets. So it's been a year of very interesting dynamics. The markets have been very challenging this year. We've seen equity markets at the moment still trailing our last year performance. As at now, we've done about 87 billion in turnover compared to 92 billion same time last year. On the bond side, we had about 638 compared to 721 last year. So that's been a bit of a challenge.
Sitting from my end and just investors' point of view, one would ask a bare question. What's your view on frontier markets? Is it still viable? Do we still have, a future to look at that will really skyrocket this up?
The growth nations or the growth economies are in the frontier markets.
Yeah.
Why? We have a youthful population. And look about Kenya, for instance, 70% of our population is below the age of 35.
Yeah.
So we've got a very good youthful population. We have arable opportunities in Africa. I mean, we've got high growth sectors. We have new growth sectors coming in. Things like technology. The adoption of technology in Africa is amazing and really growing.
Yeah.
So the growth potential is inherent in the emerging and frontier markets.
Yeah.
So this is where the growth is going to be. Now, for that to happen, then there's need for investments to take place in these economies. If you're talking about the untapped potential, for instance, in agriculture, I mean, the amount of arable land that we have not yet even utilized or optimized is still high. So there's need for capital investments into this area. If you're talking about manufacturing, our economies are still what you call light industry manufacturers.
Okay.
I mean, we have the potential to do heavy industry. We have the potential to produce cars here.
Yeah.
As long as we build our energy resources and all this kind of thing.
Yeah.
Services, the banking sectors is still a very nascent in this region.
Okay.
So this region, Africa, exhibits high growth opportunity.
Okay.
And so frontier markets are still the bright spot when you think about the future.
Okay.
Yeah.
Thanks for that. And speaking about Africa, by the way, you have talked and you have there's been sentiments about the African exchange project finally kicking off, and there are questions of how soon can this happen, and what would be the ultimate benefits for the intra-Africa stock exchange. Yeah.
So the Africa Exchange Linkage Project actually kicked off. It was launched in Cote d'Ivoire. I think it was in 2021. We launched it, and we are now in the process of trying to get brokers to connect with each other. The pilots, we have a pilot project of 9 exchanges. Already trades are taking place in West Africa. Nairobi is also trading with some exchanges in West Africa. But we still haven't got traction. It's going to be a long play. It's not a short play. It's a long play in that we first of all have to have the relationships established. So brokers in Kenya, brokers in Cote d'Ivoire, brokers in Nigeria, brokers in South Africa have to establish relationships. And then we have to show the clients the opportunities. What is in Cote d'Ivoire today? For instance, Cote d'Ivoire, we've got one very strong telecom company called Sonatel. I mean, do Kenyans know about Sonatel? We don't know. Yet it's a growing company. I mean, today you got companies in South Africa that are doing very well. So it's going to be up to the broker, the intermediaries, to educate the clients and show them opportunities outside Kenya. And then the exchange project then becomes relevant because now we'll be able to execute trades for you. I mean, today, if you want to diversify your portfolio, just don't diversify it in the country. Diversify your country risk as well. So if you want to take an exposure in Nigeria or Cote d'Ivoire and have a very well diversified portfolio, I mean, today, we all say we're hearing Dangote is the richest man in Africa. Yet Dangote shares are available in Nigeria. Why don't you buy a bit of Dangote through your broker, so that you enjoy the benefits of all this? But it's going to take place. I expect to see the linkage project contributing greatly to cross listings as well. As companies become familiar to various territories, for instance, if Kenyans start understanding a company like Dangote, when Dangote wants to do a capital raise, they will not only do it in Nigeria, but they will say, let's give a portion of our company to Kenya. Let's list some shares in Kenya. And the linkage, that's the benefit of the linkage project, because there will be an appreciation that we've got so many clients in Kenya buying Dangote shares. So now we are raising capital. Let's allocate some to Kenya. It happened with the Bank of Kigali. Bank of Kigali decided, our market is not deep enough. Let's sell some rights to Kenya by transferring actual shares to Kenya. And today, the price of Bank of Kigali here is much higher than the price in Rwanda because Kenya is deeper market. So if they want to do an IPO today or a second IPO, they can actually do it and sell it regionally.
Okay.
Because people want Bank of Kigali,
okay,
including myself. So I think it's a very good project.
Yeah.
We recently did another pilot trade during the ASEA conference, and it was successful.
Yeah.
And then the data is available.
Yeah.
You can see markets. You can see almost 10 markets today, and be able to make decisions.
Speaking of the ASEA conference, you are the secretary at NEC.
Yes.
And I saw the entire Africa markets here assembled, and even His Excellency graced the occasion. One of the key things that people would ask is, when you look at Africa, some of the key takeouts, and I heard some speaking about it, is the listing challenge cutting across Africa. I would like you to comment on that, and just also give a positive on any takeouts that we had from the conference that you'd want to highlight. Yeah.
So we were so happy to host the 26th annual general meeting for the ASEA.
Yeah.
ASEA was started here back in so many years back, and we were celebrating our 30th anniversary as an exchange, as an ASEA. Yeah. But of course, having the 26th annual general meeting. And so we are very thankful that His Excellency the President came to grace it and made a very good speech for capital markets, including the fact that capital markets should be taking a leading position on green asset financing. And that's a new frontier for our markets. Exchanges are best placed to drive that agenda. That's one of the key takeaways that we want to see delivered out of that conference. So this conference, of course, then brings us to discuss various things, and we had very many topical issues. Key among them was the listing issues. So the listing of new companies, we've experienced a bear run as a continent. Very few listings happening. The latest listing we saw was in Uganda, where Airtel listed their company the other day. And I think it's a function of really what's going on in the economies. So when the macro effects are not, and the fundamentals are not as strong, then it's very difficult to see valuations of markets improve. So across Africa, markets have been declining because the macro factors are a challenge. Today, interest rates are quite high. Currency rates have gone up. I mean, the exchange rates are quite unstable. There's a lot of pressure on capital from many sectors. So valuations are down. And when valuations are down, nobody wants to bring their company and sell it at a low price.
At a low price, you're right.
So the macros have to improve so that the markets can improve. And that then attracts new listings. So it's not only a challenge in Africa, it's across the globe. There's been a decline in listings across continents because of the issues of the interest rates across. It's not only affecting Africa. Can you imagine today, rates in the US are 5.25%. That is the Fed Reserve rate, which is quite a significant rise. Very, very steep rise.
Absolutely.
And that affects a lot of factors.
Let's come local, because this year had started with a lot of optimism, and 2024 is here now. And you brought the head of state as well here, and he was quite pronounced in terms of privatization and all that. And we know there are cases I've heard, some people challenging this. But there was a lot of excitement just generally in the market when it comes to this. I don't know. I know we are not allowed to comment a lot of things when they're in court, but what's your general comment on this with regards to if this was to be actualized? Really?
I think speaking generally, what improves market, one of the key measure of market performance is the ability for it to increase its listings. And so we've been experiencing quite a challenge in that area. One, because a lot of companies have decided to look for alternative funding sources, more especially private equity, bank debt, and all those alternatives. And so they've really never seen the need for getting capital from the capital markets. And that's been quite a challenge. And I'm speaking about private sector. I think the other thing is that we we have not seen in the last few years government's listings coming through.
Yeah.
But now we see there's discussions and progress around that area, albeit the fact that now there's a court matter on it.
Yeah.
But I think we're very optimistic that things are going to change.
Yeah.
We're actually in the process of expanding our pipeline to include SMEs, who we think are going to be really the main source of new IPOs.
Okay.
Just recently, we admitted another 30 onto the Booker program. They graduated, and these companies are going to be looking for capital very shortly. And I think that's going to help accelerate the number of listings. So the challenge has really been the fact that there's a lot of funding available. For corporate businesses, and hence they've never seen the need to come to the market.
Okay.
The valuations have not been very good the last few years. So again, coming here to sell your company is not as attractive. Okay. However, we have delivered a different value proposition to companies. I think today a company that is totally reliant on one source of funding is exposing themselves to risks, especially around the accessibility of that funding source and cost. But when you blend by taking equity into your business, you're managing your cost of funding in the business, and two, the patience and the long-term nature of that capital. So that is trying to sink in. Corporates are trying to understand that. And then the other thing is giving part of equity to the market doesn't mean you lose control of your business. It even strengthens your governance. When you are a family business and you give away 20 or 30% of your business to somebody else, you're compelled to run the company well.
You're right.
Because then there's a new shareholder. It's no longer a family table meeting. It's actually a board meeting, isn't it?
Yes.
So the life of a business succeeds well when it's shared. And so we've been able to share that, and we've shared experiences of companies that have just refused to come to the market and today are not even existing. So we're starting to see some level of change. The final one is very interesting. There are companies that are now going through intergenerational change. So the new generation do not want to continue with the family businesses. They're in different careers. So they are like, why don't you let the company come to the market and let us sell part of it and go and do what our dream careers. So that intergenerational change is going to be happening a lot, and it's going to be able to change again the mindset around listings. So I can only say that we're looking at a brighter future, but still some work to be done.
Finally, Jeff, let's talk about, I actually had lots of questions, just that time is going. Let's talk about SLB, Securities Lending and Borrowing. I think you launched that. But since it's launched, there's been a bit of low uptake on it. And I wanted to hear what needs to be done more to unlock it from your perspective.
So we launched Securities Lending and Borrowing to encourage to bring in more liquidity in the market. Today, when you profile the shareholding structure of companies today, you find that there are almost 80% are long-term investors, people who have no intention to sell. But what's happening is that now the 20% that we have in the market is what is trading every day. Yet, if you have a long position, you could actually lend that stock to the market and let somebody trade with it. You still get the economic benefits of the dividends. But at least there's some buying and selling taking place. So that liquidity comes to the market, and that makes the market more vibrant. Now, we introduced a screen-based model, which allows you to see anybody wanting to lend on screen. But that didn't go too well. A lot of people still want to have bilateral negotiations. So I want you to approach me personally and tell me, Maina, Jeff, we have a discussion, we fill a form and say, okay, fine, this is my stock, give it back to me. So there's that appreciation that has not happened. So there are two approaches that are currently, two models that are currently going to work. They're going to be screen-based. It's going to be bilateral. I think a lot of it also has to be with education, so that you can build an understanding that giving your stock doesn't mean you're losing it. So that is still a bit of an area of work that needs to happen. So we need to trigger that off.
Okay.
We then have to trigger off the market-making function as well. We need to bring the borrowers in the market. We need to bring investment banks that can come and actually want to borrow that security. Okay. So when that demand side comes in, then there'll be a trigger. Okay. Because I'll come and say, who has got Safaricom, who has got NSE shares? I'm willing to borrow and pay this kind of interest over time. But that side of things also haven't happened. Okay. So it's an area of growth, and we are going to be working hard to ensure that we see that improve.
2024 is here. What's your focus, and really what's in your crystal ball that will make you say, yes, this has been a good year?
I think it's going to be the last year of our strategic plan as a company.
Okay.
There's going to be a lot of focus to try and catch up on that plan. Yeah. Especially around listings. I think that's going to be a very big area, because the pillar that is still running behind on our strategic plan is our sustainable growth pillar, which involves listings, it involves revenue growth, it involves market vibrancy, it involves uptake of new products. So that's going to be the focus that we're going to take into 2023, 2024. And to achieve that, there are clear corporate objectives that have been agreed and signed and budgeted that has to be actualized. And so that's going to be the focus. Okay. This is the year that they also begin the new plan, 2025, and that's going to be formulated. But I think the new plan then will be more aligned to what we want to achieve as a country as well. It will be aligned to how to make the market a very key partner of the economic development, and trying to map it out. So that's what I pretend is going to happen in 2025.
And we look forward to that.
Yes.
I want to give a final message to investors who are watching and are keenly following this conversation. What's your word?
You know, there's something called hindsight. We all look at things with hindsight and say, I wish I took that opportunity.
Yes.
I can tell you certainly, the current market valuations we are seeing are extremely attractive. Okay. I do not see an opportunity, this opportunity being there for a very long time. Okay. So let's not start looking at things in hindsight and say, I wish I did it. This is the time to buy. The markets are so attractive. The fundamentals of companies are strong. Investing in the equity markets is now giving you almost an equivalent money market return from a dividend perspective. So we should avoid that risk, the risk of hindsight, and encourage all of you to invest in the market. Okay. And really, it's the way to go.
All right.
Yes.
I want to put you on the spot because you're a leader, corporate leader in the corporate sector here in Kenya. Yeah. And one of the key things is 2023 was quite a hard year for many sectors across the board. What has been your one or two key learnings in terms of leadership that you could share with your peers and even anybody else who's looking up to you? Yeah. Yeah.
Well, you're right. It's a very tough year. But one of the key learnings is that as a leader, you've got to be resilient. Yeah. You never give up. Yeah. I think always you got to keep the team focused on the goal. I can tell you, despite us having a difficult year in the markets, we are not doing as badly as a company. Okay. The business is actually performing and doing well because we have broadened our business. We said this is going to be a tough year on the equity market. Yeah. What else can we do differently? So resilience, trying to keep it aligned. So for me, in such markets, leaders have to be resilient. Okay. All right. Okay. Yeah. The other learnings that I've seen is this is when you need your team most. Okay. Yeah. You need to be a team, team leader. Yeah. And not a lone ranger because things are not working easily. Yeah. Yeah. You know, in the success, you all think that wow, I can do it. Yeah. Yeah, but this is when you need your team most, and I've seen that. I mean, I've had a fantastic team of people, the whole institution, and people who are just thinking, what next? What can we do? What can we do to improve? Let's break this line. Let's, everybody trying their best to keep the business going. So you need to have a very strong team, and work as a team.
All right.
Yeah.
Okay. Great. Thank you so much for your time, Jeff.
Thank you. Lovely.
Always a pleasure.
Also, and I wish you all a Merry Christmas and looking forward to seeing you in the new year. Thank you very much. Yeah. Thank you.
There you have it. Geoff Odundo, the CEO, right here at the NSE, really optimistic about this year and what's coming up. Thank you so much. Wish you all a happy 2024.